Our top story, more turmoil in Asian stock markets today after China let the yuan fall at a faster pace. Trading in Chinese shares was suspended for the second time this week. Singapore's STI did not escape the regional bloodbath, closing at its lowest level in 3.5 years. Well, analysts expect more volatility in coming days, but say that some stocks are now trading at very attractive levels.
Asian markets fell sharply on Thursday, spooked by a steep drop in Chinese stocks that triggered circuit breakers and halted trading after just 30 minutes. The sell-off was triggered by the central bank's surprise decision to devalue the yuan by about 0.5% against the US dollar. Chinese stocks were down 7% at the time of suspension. Among major Asian bourses, Hong Kong's Hang Seng Index ended 3.1% lower, while the Nikkei stock average dropped 2.3%. In Singapore, the STI closed 2.7% lower and was one of the biggest losers among regional bourses. Experts say regional volatility will likely continue given how tied the rest of Asia is to China.
It is undoubtedly going to have a knock-on effect on the rest of Asia, which is so linked to China. So if the Chinese economy slows down, it will have an impact on the economy in terms of the ability of Asia to export to China. I think the other linkage between China and the rest of Asia is that if the Chinese currency continues to weaken, we could see further weakness in other Asian currencies. And as a consequence, you could see capital outflows taking place from Asian markets because of weaker currencies.
But one market watcher says there's value to be found in stocks amid the market turmoil.
Worries about the Middle East, low oil price, which is good for consumers in the West, and some technical problems with the Chinese market. What has changed with regard to the global outlook fundamentally? I would say very, very little. So there's great value is starting to appear in equity markets, particularly those Asian markets which are biased towards manufacturing, which will benefit from low commodity costs, low energy costs.
Today's turmoil in China also affected other financial markets. The US dollar gained against most Asian currencies, although it was flat against the Sing dollar. Global oil prices also took a hit, tumbling to less than $34 a barrel, its lowest in 11 years.